In 1980, the average American family could buy a house on one income. In 2024, even two incomes barely cover the mortgage. The American dream of homeownership hasn't disappeared. It's just been priced out of reach. Let's break down exactly how and why it's happened. Before we dive in, hit that subscribe button if you're ready to stop guessing and start understanding the real numbers behind today's housing crisis. Let's get into it. 1. Home prices versus income then and now. Let's start with the basics. Home prices versus household income. Back in 1980, the average home cost $47,200. The typical household income? Around $21,000 a year. That's a ratio of just 2.2 times annual income. Now, jump to 2024. The average home price has ballooned to $412,000, while the average household income sits at about $74,600. That's a ratio of 8.7 times income, nearly 4 times higher than in 1980. This isn't just a back-in-my-day story. This is a full-blown shift in economic structure. The numbers don't lie. In real terms, millennials and Gen Z are earning more nominally, but getting less home for their money. A lot less. 2. Down payments and monthly payments. In 1980, with a typical 20% down payment, you need to put about $9,400 down to buy a house. Your monthly mortgage at a 13% interest rate, roughly $518. Now in 2024, most buyers can't afford to put 20% down. So they go with 5% down. That's $20,600 on a $412,000 home. And that smaller down payment means a higher monthly cost and more risk. Even though today's interest rates are only around 7%, your monthly payment now jumps to $2,736. That's over 5 times the monthly cost compared to 1980, despite lower rates. And remember, in the 80s, those payments came from one income. Today, 2 full-time earners may struggle to keep up. So while interest rates have dropped from 13% to 7%, it doesn't matter when the total loan amount has grown by nearly 900%. The balance sheet just doesn't add up for today's buyer. 3. The loss of buying power. Let's talk about buying power. According to inflation calculators, $1 in 1980 equals about $3.66 today. That means if home prices had only kept pace with inflation, that $47,200 house should now cost around $173,000. But instead, the average home is over $412,000. Meaning prices have outpaced inflation by more than 2.5x. In many major U.S. cities, prices have soared 600 to 800% over the past 4 decades. Meanwhile, wages haven't even tripled in that same time. It's not that people today don't want homes. It's that the system has made it almost impossible to own one without massive debt, outside help, or generational wealth. Conclusion. So, the next time someone says, just buy a house, that's what I did. Ask them one question. Where did you buy it? If you found this breakdown helpful, hit that subscribe button so you don't miss our next deep dive into the realities behind modern finance. Give the video a like, share it with a friend, and drop a comment below, especially if you've tried buying a home in today's market. We want to hear your story. Until next time, stay informed, stay sharp, and remember, understanding the numbers is the first step to changing the system.